Well, joining us now is Tim Evans from Longleaf Trading Group. He joins us from the CME in Chicago. Tim, great to have you with us today. Just to look at the broader market performance that we have seen, of course, it was a pretty flat finish on Wall Street. We did see the energy space, in fact, a particular drag today.
Hey, nice to be with you today, Natalie. Yeah, my perspective there on the energy markets, we tended to drift a little lower in energy relative to, what we were seeing in the broad commodity space and equity space. And I think really that's more of kind of a delayed effect in terms of bringing crude down. We were getting pretty violent movements in equities last week. And we didn't see that kind of mirrored price action in the energy space on certain days. So I think that really is more than anything just a kind of a delayed effect. And that 48.50 level really seems to kind of be where the energy space is oscillating around, given that the 50 and 100-day moving averages are coming in right at those prices. So, as we tend to as the bears seem to kind of overwhelm the bulls, as we drift a little lower, the 48.50, you'll see a little kind of burst lower. I'd imagine as we drift potentially back up to that 48.50, we'll probably see the other side of that with bulls, helping lift the market back to 50. But I think in the energy space, we actually have some pretty decent balance currently.
Meanwhile, just diving into some of the themes that we've been looking at a little bit today, of course, those continued geopolitical tensions between the US and North Korea, and gold, of course, as that safe haven asset, has been benefiting from this. We've seen gold futures, in fact, rising off the back of that continued concern.
Yeah, I think last week was pretty telling. Last week, actually, gold was able to advance, as of Friday to, new highs for 2017 at 1303 and a half. We've attempted to reach that 1300 level 2 times here this year, but the market ultimately has not been able to hold those levels, and, we've quickly drifted back beneath 1300 those 2 previous times. We were able to climb and achieve the new high for the year. And, the storylines that had really helped get us there the other 2 times really weren't the driving stories this time around. The U.S. dollar, there'd been a kind of a strong inverse relationship with gold and the U.S. dollar this year. Gold was ultimately able to make that run higher to 1303 and a half without a substantial move lower in the dollar. So I thought that was an important development. And there really wasn't any new big developments with respect to North Korea, and the United States last week. So the storyline shifted a little bit, but gold ultimately was able to make a move and put in that new high. We weren't able to hold that into Friday's close. There's still a lot of selling interest in the market. Obviously this downtrend has been in place for a very long time. So, the market kind of is in a habit of selling, selling rallies, and it seemed to kind of repeat that theme on Friday. But before putting in a lower low this morning, we had a pretty strong rebound, and last time I looked, we were trading about 1294, which I thought, showed some good resolve on the bull side. So, I think gold potentially could, depending on, Jackson Hole this week and any other geopolitical developments, could have a very important week this week, getting through that key resistance level of 1300 to stay.
And with that in mind, and you pointed to, of course, some of the other events that we are looking to when it comes to the precious metal, what sort of strategy are you adopting here? Because, of course, last time we spoke on gold, we were discussing the fact that if these geopolitical tensions did persist, we would see gold above 1,300 US dollars. That has now happened, as you mentioned, hitting that new high. Where to from here, and how are you positioning yourself best to maximize that?
Yeah, that's a very good question. For those that, position kind of on a trend following side or more of a directional side, gold's been a tough market to invest in. You'd had to utilize, a little more complexity in the strategies if you're ultimately going to be investing successfully in gold this year. I think the option space is really the one space that gives you the unique opportunity to capitalize on the unique characteristics that gold has currently. From a fundamental standpoint, Natalie, it's kind of interesting. All these potential events that gold seems to be reacting to, they can be historical events. The themes really seem to be, with respect to North Korea and the United States. We could potentially be looking at a nuclear war. A nuclear weapon hasn't been fired off in a time of war in 70 years roughly. We also could be looking at potentially a failed presidency, with the Trump administration, all the issues they're having. There's very few people on planet Earth that have been investing through a period of a failed presidency. I mean, we'd have to go back to, the Richard Nixon administration. So if anyone's still trading, they're a little long in the tooth at this point. So I mean, any of these developments will be historic events, which obviously would add a significant amount of volatility to the market. And I'm not suggesting that any of these events are ultimately going to occur, in the near or intermediate or long term for that matter. But the threat of these events clearly has the bulls in the market. It gives them a lot to work with. We get through this 1300 level, and really shake out these shorts that have been really stubborn in keeping the market below this. I mean, we could springboard higher. And so I think the strategy that makes the most sense, given that kind of market environment, I think one would have to be really long calls. I mean, because that allows you to take on positions that have a low delta, which gives you convexity that you can only really get from out of the money calls. And that really allows you to position, effectively on a relative basis at low cost, but it will allow you to capitalize on any of these historical events if they ultimately did materialize. So there's a variety of different ways you could structure, that type of investment, but I think out of the money calls are clearly the way to go at this point.
As you mentioned, those events giving investors a lot to trade on and us lots to talk about. Tim, we'll have to leave it there. Thank you so much.